Okay, everyone, it is the midpoint, as Jeanette said. It's a bit of a long day here, but I hope worth your while. I've been watching my fellow TradeThirsty colleagues, and I think they all have provided great lessons and values. So first, to make sure everyone's still there, you don't fall asleep on your keyboards, please type in AV, like audio visual, if you can hear me, Hima, not Jeanette, not Serge, etc. If you can hear me, Hima, please type in AV, and we'll get started. Okay, thank you, Chris and Keith and Pat and Alwyn and David and Sumant and Stephen. Okay, looks like we're good to go. So I am, as Jeanette, kind of new to the TradeThirsty team, though it seems like it has been a really long time. Yeah, I haven't even known you for 2 years yet, Jeanette, which is crazy. But it's been a wild 18 months or so. So I am going to be sharing content about the way I use RSI, which is different than everyone else. But of course, before we talk about this indicator or these crazy markets or anything else, I got to make sure everybody remembers, if you haven't heard already this morning, the risks involved in trading. It can be extremely risky business, and so it's your responsibility to take what I present here today and evaluate the information, opinion, advice, and other content before applying it to your own analysis, all right? So we're all here giving you tools and indicators and tips that work for us, but obviously the markets are not repeating in exact patterns all the time, so you got to make sure you practice and then move forward. And so for anyone else who also just joined the room, this is second sound check, and then I'll dive in. Please type a D for disclosure. If you can see this slide, you hear me talking about it, and we will move on. All right, sweet. This is me, Hima Reddy. Been studying, analyzing the markets for over 16 years. First learned about them from my dad when I was a teenager. And I saw him trading one evening, and I said, what do I study in college, Dad, to learn how to trade? And he said, well, you're not really going to learn to trade, but I'll send you off to Indiana University. I got a nice, shiny finance degree. And at the end of all that, 4 years later, I said, Dad, I didn't see anything about the charts and candles and all this fun stuff that you showed me. So he said, well, how about you move back home, work part-time, and I will teach you. So I completely skipped past the fundamental work route, and I came back home and started learning technicals. And my dad handed me this book called How to Make Profits Trading in Commodities, written by this guy here, W.D. Gann. It's a very old text, been around for a really long time, but the concepts in it stood the test of time. That's when my dad started me off with this. He also set me up with TradeStation software. He said it was the best. I still use it today. And he had me specifically look at the E-mini S&P 500 futures 1 minute bar chart, which is kind of a wild place to enter into trading, especially in the early 2000s. But this was definitely a good way for me to learn, because as I read the book and watched the charts, I saw these different patterns and opportunities emerge. And then I took things another step further. I took the words in Gann's book, which were mostly words and a few stock charts, and I made graphic images like these to help me learn the concepts and the patterns even faster. It wasn't long before I realized that if I actually prepared ahead of the trading session, light bulb moment, that I might actually perform better, because by now my dad funded my account. I was trading one lots of VES. And so I started writing a report that I so cutely named the skinny on the mini, because the skinny is, American slang for the essence, the lowdown, the key points about something. And I would write this report every evening and be ready for, 9:30 a.m. Eastern the next morning. I even started forwarding to my dad. And he didn't tell me at first, but a few weeks in, he was using the way I address RSI, the way I come up with support and resistance and more to make better trades, to stay in winning trades longer and to cut his losses faster. So we both realized that I kind of had a knack for analysis. And this is my revelation slide. That's why it's blank. So my revelation was trading is awesome. I'm going to come back to it, but I have an analyst knack in me. I got to go explore it. So I went and got my CMT, Chartered Market Technician designation, and I got my first job on Wall Street. I was a technical analyst. Again, completely bypassed the fundamental route except for my college education. Now, a few years into my job, people heard my story, and an editor at a large publisher came and said, you have a unique approach to Gann's work. You entered the world of finance through technical analysis. Would you be willing to write a book that could help others learn the way you did? And I said, sure. So my book here came out in 2012. Took about 1.5 years to write, so I joked that it was my first kid, since I don't have real human kids yet. But this book was my, true outpour of all of my unique learning experience, and people resonated with it, right? They saw that this college grad had taken these old concepts and made them work, so they started coming and asking me, how can we see this come to life? So I started sharing the skinny on the mini with them. Just put it out as a blog post, didn't collect emails or anything at first, then started to keep track of who's getting it. And it was my book readers and my webinar attendees and my technical analysis colleagues on Wall Street. So this went on for some time and my circle grew. And then my husband and I, my husband is from Wisconsin, and we moved to Minnesota and our journeys together. And we both had good new jobs there that we were happy with, and mine was again in the corporate landscape. This time, though, it was in the equity research department of an investment bank. So between this job and his Midwestern roots, which had spread onto me, I mean, look at this. I'm a T-shirt wearing, bratwurst eating Packers football fan. Never saw that coming, okay? We thought we were going to be staying in Minnesota like forever. So I could not keep writing the skinny and the mini, right? I'm going to work at an investment bank. I got to shut that down. So I went back to all the people who'd been getting it, said, hey guys, I'm going to have to take this down. And then they started telling me how sad they'd be to see it go. I was suddenly made aware of all the different ways in which my research had been helping them. And I thought, all right, I've got to bring this back someday. So life carried on, and we actually ended up leaving Minnesota and going to New York, my home state, but this time to Buffalo, because my husband kind of just keeps outdoing himself in his career. He did so recently again, and so now we are in St. Louis, Missouri. We just moved this fall. But something really unfortunate happened in moving from Minnesota to New York. Not only did I have to leave my sell-side job and kind of get back to square one again, 6 days after moving to Buffalo, my dad died. No warning, no heads up. He wasn't sick as far as we knew. He just passed away in his sleep, heart attack, and it completely turned my life upside down because I now had a mother who didn't know anything about finances or legal matters, who needed a lot of help to maintain her home and what my father had left for her. And I have 3 younger siblings that also, while they're adults, didn't know how to navigate any of this. So I had to stop everything and take care of that. But once I finished, I realized, I don't want to go back in the corporate world. I want to be there for my family. I want to have more independence. I want to come back to trading, and I want to come back to the skinny and the mini. So I did. And I came back to everyone who had been getting it over all those years. And I said, guys, let's do this. Let's start this out. My dad used to joke that I gave away too much of my hard work for free. So he said, you should charge $1 a day if you ever start selling that skinny and the mini of yours. And so I did. I started $1 a day, and people started paying me for it. And here we are a couple years later, and my subscribers not only enjoy the skinny and the mini, but they have demanded of me that I provide education, like what I'm about to show you here today, and products and services that can help them not only trade the E-mini futures better, but all markets better. And so it was when I connected with TradeThirsty, as Jeanette said. And it was at a Traders Expo. I think it was in New York where I first met you, but saw you in Vegas a couple times now. And the rest of the TradeThirsty team, some of you recognize the speakers that are here, that I was able to finally marry what was in my head all these years of these great, awesome, effective ways I was doing analysis and trading, but translate them into a way that you all could learn from. So if you're still with me, if you just entered the room, let's just take this as a one last sound check. Please type in S for me, S for story, S for skinny, and I'm going to dive into the way I use RSI and how we use it to find sweet spots in stocks. All right, awesome. Thank you for the confirmation there. So this is a quick recap for many of you who know about the way I use the RSI, but a fun intro for those of you who are new. So here's a football field. Your screen is not deceiving you. And this is the way I use, explain the way I use RSI, because it really does parallel. So let's start with the basics. We've got the good old Green Bay Packers on one side of the field and their biggest rivals. Who would you guys say are their biggest rivals? I mean, it's football season now, so there's a lot of, heated debate about who's really whooping who, but historically, who would you say are their biggest rivals? I would not say the Vikings. I would not say the Lions. I would agree with KM here and say the Bears, okay? Chicago Bears. Now, these two teams or any other, where when they're in the football field, they have the same objective, but in different directions. When the Packers have the ball, they are trying to get through the Bears line of defense, get to the end zone, make something happen, right? Same thing if the Bears have the ball. They're trying to get through the Packers defense, get to their end zone. So the takeaway from this slide here, guys, is that in the game of football, nothing happens unless you're in the zone. And it's the same way with the RSI momentum. So we're going to take that 100-yard field, flip it on its head, Now we're going to stretch the 0 and 100 out over the end zones, plop it down. So if you've never seen the relative strength index before, here's what it looks like. But all of you have access to this. How do I know that as a fact? Because even if it's not in your trading software that you use now, you can go to stockcharts.com and Yahoo Finance and all of those and plot this, okay? So what you see on the bottom here is the default, the way that it's used cookie cutter all the time. How many of you use the RSI? You can just type in R for me, R for RSI. It gives me some perspective on the level of expertise I'm dealing with here. Okay, so here we've just got a snapshot of my baby, the ES, from the spring, or last spring actually, of 2017 into some of the recent price action. Now, the standard setting of 14 periods. So let's go back to 1978. Mr. Wells Wilder puts out the relative strength index, releases it to the world, and he puts a 14-period setting on it, okay? We are not messing with that because all the extrapolations off the RSI that I'm going to show you are based on retaining the 14 periods. That means every calculation, every plot of this solid line is looking only 14 periods back, okay? So this is so vitally important that I need you to type the number 14 to make sure you're not going to mess with that setting. And then we're going to do a quick recap of what the traditional RSI is, and I'm going to give you my new settings. All right, so 14 stays the same, okay? Everything else is going to be flipped around. But what is the traditional approach? Well, it's really simple. Mostly, it's about looking at overbought versus oversold conditions in the market. And when you're above 70 in the RSI and turn back down, that is usually a sell signal. So you can see how this makes this a hard-to-use indicator when you're in a strong uptrending market, because you're going to get these readings that are overbought and turn back down, and it's going to be red and it's going to be scary, but it's not necessarily time to sell. Okay, that's what these pink highlights indicate, the challenge of using this in a trending environment. You have a similar issue on the downside. When RSI falls below 30, it's considered oversold conditions, and buy signals live there. It's not automatic, okay, but you can see that the one in February was fantastic, right? We would have all loved to trade that low. And maybe would have been happy to trade the low of this latest blue highlight here, but see, it was very short-lived. It didn't really give us a strong move up like maybe we thought was going to happen in February. Now, we did get another signal in the latest low that formed that was wiped out this week. Yes, I know. But you can see how this limitation of just 30 and 70 is not going to cut it, okay? So for us to be able to use the RSI in uptrends and downtrends and in trading ranges, let's expand the field. Let's look at more than just what the traditional gives us, okay? So when it comes to using only the standard overbought, oversold approach, we're going to politely call BS, and we're going to open up the space here, open up the field. So let's look at that football field one more time. Remember the Bears, the Chicago Bears, grr, boo, right? When they have the ball, they need to get to their end zone to make anything happen. So when the field is in this lineup, they're really only living in two parts of the field. They're living where they start off, okay, where their offensive line starts off, which is here and progresses down, and they're trying to get here, okay? They're not really bothering with all that space up there. It's the same way for the RSI. So let me erase this and take you to the first set of settings. Okay, guys, this is when you need to start taking notes because this is something you can actually take away from our time today and use on your own. But it's worth your while to stick around for the next 45 minutes. Here are the settings for the way I use the RSI. I use them in what's called the RSI power zones, okay? I learned about these zones during my CMT studies. I did not invent them. A group of technicians worked on the RSI soon after it was released in the late 70s and came up with these zones. However, I learned about these a long, long time ago, and then I developed systems and signals off of them. So that's all me, including how I approach it to find sweet spots. So the bear resistance power zone, this pink shaded area now, is lining up between 55 and 65. That is where a bear market or down market is tending to find resistance or be overbought, okay? So here's a couple highlights that I'll show you after I show you the two zones. Now, the bear support power zone includes the traditional 30 level, but it pushes down to 20. So think of these guys as cushions, all right? Cushions that tend to encapsulate movement in a bear market or downtrend. Bear resistance power zone, 55 to 65. Bear support power zone, 20 to 30. Once you have these numbers jotted down, once you've kind of digested this slide, you can take a screenshot, keep it for your own purposes, take a picture with your smartphone, whatever works for you. Then just type a C for Chicago Bear for me so I know you're ready, and we'll go on to the bull settings. All right. So see here how in the correction that we had earlier this year, the first sign that we might not actually be out of the woods came with the resistance in the bear power zone. And on this entire recovery that we had in the first part of November, I was skeptical. And one of the reasons was because of the way the RSI power zones were behaving. Now let's look at the bull scenario. Market bulls, okay, just like the bears, the bulls have their own sort of territory in the RSI power zones. And here they are. They tend to find resistance up to at 80 to 90, this big green band up here, not just 70. So we've now made a more extreme parameter that they would have to reach, which makes sense. Bulls should be able to bring conditions up higher into more extreme overbought readings before there's an actual trend reversal to the downside. And the support power zone is from 40 to 50. Forget about 30. Now we're completely up inside of that line. And this is where you can expect a bull market to show support forming in its RSI readings. So let's highlight a couple examples here. Everybody come back to the left side of the chart here, okay? Seems like forever ago that there was a steady uptrend in this market or most others, but it did happen. It wasn't that long ago. So last year, in the spring, summer, we had a hold in the bull support power zone. We had another one midsummer, another one into the fall, another one right in the holiday season. That would have been a nice little entry, right? But you wouldn't have caught any of these by just looking at 30. We had the breakout from the multi-month sideways range accompanied by RSI holding the bull support power zone and a continuation of that afterwards, okay? So there is a lot of value in using the power zones versus the standard RSI. And this, again, was a refresher or an intro for those of you who haven't seen it before. But what I want to show you is my approach, my methodology to using this to find sweet spots in the market. So to make sure everyone's got this basic knowledge down, got the settings, please type a B for bulls, and we will carry on. Okay. So I noticed that last year at TradeGiving, I did a menu like this, and I thought it was kind of fun. So this is our menu for today. You've already heard about me. You now got RSI Power Zones basics. Check. Appetizer done. Now, 5 steps to using RSI to find sweet spots in stocks. Okay. This is a broad approach, but we're going to go through different ways that I use it and a simple format in which it now exists. First, let me take you back to my story. Do you guys remember how many younger siblings I said I had? Was it 1, 2, or 3? That's right. I'm the oldest of 4. So I have a bit of an eldest sibling bossy streak in me. I have to admit it. And when I was really young with my siblings, whether it was road trips or plane rides or whatnot, it was super easy to outsmart them, if you will, with a very simple game. This one right here, classic, tic-tac-toe. Because you could just do it on a napkin, you could do it with crayons, it didn't matter. I didn't need a whole setup. If I just felt like being the bossy older sister, I'd start playing with them. They're a lot younger than me, so it was not really fair, but hey, like I said, I had that streak. But tic-tac-toe has a very basic concept to it, but we're going to translate this to how we organize information and figure out what's going on in the market. So reminder of how it plays out, because again, it's been a while maybe for some of you. You want to get your 3 X's or 3 O's on the grid in a row. So maybe 3 X's across the top. Or if you were O's, you may end up with 3 down the bottom. Now, naturally, you're not just doing this all on your own. You have a partner you're alternating with and putting X's and O's differently, right? Or taking turns. But let's take a look at the grid in a different way. Do you guys see these A through I? I'm also getting somebody saying that my audio is cutting out. So if you can hear me, just type an A for me, the letter A, like the first box here. Just want to make sure I'm still coming through. Okay, it may just be one person. And so here we have the grid, tic-tac-toe grid again that we all grew up with, but I just labeled the boxes because I'm going to ask you an important question. If you were sitting down with a sibling, with a friend, whoever you wanted to outsmart, what box would you pick if you got the first go on where you place your extra O? Yes, hands down, almost all of you are saying you would pick box E because it's the center of the grid. It's where the magic happens. It is the most actionable point for you to then be able to increase your chances of winning. What does that look like? Well, you could be starting O there, and depending what plays out, you might end up with the diagonal, or you could be starting X there, depending on what plays out with your, in my case, sibling you're trying to outsmart. You could end up with 3 X's across. There's a lot more options to get your 3 in a row from this box, okay? So just like I use football to explain the RSI, I'm using tic-tac-toe to get you in a mindset of how you think about the market. E is where that magic is, right? That center box. Now, what I'm going to walk you through is the steps that I use to find the sweet spots in stocks, and we're going to continue on the menu, okay? So there's 5 steps total. First thing I do, and this is from a swing trading perspective, guys, okay? So looking to stay in a trade for a few days, few weeks, or longer, depending on how the market plays out. Step 1, review your weekly stock chart and assess the price trend. The weekly time frame is where I start because this comes from my GAN education, and this also is, in my experience, the best place to start for swing trading approach, okay? My dad didn't just teach me about the ES and 1-minute charts. He used that to get me familiar with price movement. He was much more of a swing trader because he had a day job. Now, your choices are always going to be uptrend, downtrend, or sideways. Okay, sideways or no trend is a choice, guys. Don't force a trend in a market that isn't showing you one. After you've figured out what's going on a weekly chart in terms of price, then go evaluate the weekly RSI power zones reading. You don't have to have the RSI power zones indicator to do this. I may be slapping myself by saying that, but it's true. You can do what I did for many years before I was able to create the programmed indicator and just memorize the zones, look at the RSI standard, and in your head translate what zone it's in. It's work, but it's doable. When you're looking at that RSI value, okay, whatever that number is, you're looking at it relative to those 4 zone positions. And like I said, you don't need the indicator, but use of the preset indicator, which I have available, helps because the zones are drawn in. So you don't have to even memorize that much. You can see visually where it is. So everything so far has been on the weekly chart. Now we move to the daily chart frame. Drill down, excuse me, to the daily chart time frame. And here you repeat the same steps. You first assess the price trend. Are we in a series of higher highs, lower lows, etc., or is there just no discernible trend? And then you repeat that second step. You evaluate the RSI reading. Again, with the same zone settings. RSI power zones apply on any time frame. I would not use them on a tick chart. If you're trading a tick chart, then I would apply the RSI power zones to a higher time frame chart for analysis purposes. Okay, we got 3 of our 5 steps down. And don't worry, you're going to see these in examples. Next, we determine the presence of reversal or continuation signals for entry or exit. Well, that's a very broad statement. Well, those of you who have experienced my other educational courses, etc., or even been in my other open webinars like this, guys, the signals shown here, I teach openly. They're not locked in the vault. So RSI power zone divergences, which are different than standard divergences because they depend on where the divergence is happening relative to the zones. A continuation signal example is trend line buys and sells. This is where you're using trend lines drawn on the RSI to clue you into continuation of the existing trend. So there's a variety of these. Sometimes, though, there's not even a new signal. It's just movement out of the zone that's in confluence with what you're looking at. The last of these is your risk. It's not the last because it's the least important, but it's the most important. It's just that it kind of captures everything together. You need to locate logical levels for protective stop placement. What does that mean? That means anytime you're looking at that chart, so now we've moved from the weekly to the daily, right? You're looking at this and you say, what price level would negate the signal that I'm observing? That's a logical stop, guys. It's not a money stop. It's not based on a certain percentage or dollar amount versus your account. It's literally based on what the market would have to do, not what you would have to do to protect your capital. So when possible, when your risk reward, when your account size allows for it, shoot for placing logical stops, either mental or the physical order, because then you're truly only getting stopped out because you were actually wrong on your call, not because somebody gunned your stop, okay? It's not a fun feeling. So here we have our 5 steps, and now we're going to move into the next piece of the menu. But I want to make sure you're still with me. So can you type the number 5 if you were following these 5 steps and you got the broad approach down? And we're going to drill down to some examples. All right, sweet. So we've covered 5 steps to using the stocks. That was just a theory walkthrough, if you will. So now let's go to current markets analysis using the 5 steps. All right. So coming back to the tic-tac-toe grid, here's how it all comes together, okay? This is a true story. Back in the spring, my Skinny and the Mini subscribers and my other students had been demanding of me for over a year, Hima, we want to see how you apply the RSI to a broad group of stocks and give us your picks and give us what you see, because they saw a lot of the accuracy and helpfulness of content I put out here and there. So what I did was I went into my lab and I figured out a way to do this in a simple manner to present it. I sent out a test version of this product in April. Those of you who are Skinny subscribers, you know this is true. They ate it up. They loved it. And I thought, okay, that was just a test. It took me a long time to format and piece together. I need to work on making this more, even more easy to digest. And so I did. So the final grid has boxes laid out where there's bullish and bearish scenarios. And it looks like this. And it's called the stock picks grid. Okay, so I took the tic-tac-toe I was playing with my siblings. I divided that center sweet spot into a bull and bear actionable setups. But then what about all the other ways that markets are acting, right? I needed to categorize them so that you could be ready to take advantage of their moves. So we're going to walk through a couple of these pieces here, guys. There's a total of 10, right? Because I cut the middle square in half. And I'm going to show you examples of tickers that just this week fall into those categories. So let's just take away all the extra and focus on the top left of the center square. That is the buy signal now category. Well, that's just 3 words. What does that mean? Here's what it is. Okay, I have a little mini version of it here to keep your perspective. When I put a ticker in the buy signal now category, it means it is actionable now for a buy. It is not requiring further confirmation. Okay, upward price direction has been established. So my suggestion is to build new long positions or add to existing long positions. But of course, it's those 5 steps that feed into this decision, okay? I have internal scans I run on RSI, on other trend activity, and I, from those, do a visual assessment, like with my eyeballs, to pick out the best setups. And that's what I share in this. So let's go take a look at an actual grid. Here's what it is, guys. It's very, very straightforward. So that tic-tac-toe grid, now do you see? I'm gonna line it up for you. Okay, this was the vertical line, horizontal line, horizontal line. Here's the sweet spot. Remember, sweet spot. And I've divided it into half. So the top half is the bull signal, or excuse me, buy signal now, bottom half sell signal now. At any given time when I do analysis, there might be more of one type than the other. That's why in this situation, there's just fewer sells than buys based on my assessment. There's also other categories. But let's stay on the buy signal now track, okay? Look at when this was updated, Tuesday, November 20th of 2018. That was 2 days ago, 3 days ago, okay, 2 trading days ago. So after the close on Tuesday, I did this analysis, and I'm showing you only a couple of tickers from the categories that were populated because I don't want you to get lost in all of the rest, okay? So they're just covered up for simplicity's sake right now. Buy signal now. Bring your eyeballs to the buy signal now section, and in your head, identify the 3 tickers that are in there. I'm going to highlight them for you right now. EQR, EXR, LLY. Okay, this is a range based on, yes, so there's a question, do I use sector analysis or broader analysis and then come down to these? Yeah, I don't start with just the tickers. I first look at the S&P ETF activity, and if an ETF has a certain directional flow to it, let's say to the upside, then I would only recommend buys in line with the sector move, because like many other people who are really good at swing trading, I recommend trading with the trend, especially of the bigger picture. So this grid, though, is only boiling down to actionable tickers. Does that make sense? Okay, cool. So here are the 3 tickers, guys. Let's take a look. This is how I came up with this, all right? Same 5 steps. I'm going to lay them out fully. This is the weekly chart. So what was the first step? You go to the weekly chart and you assess the price trend. Then you go to the weekly chart and you look at the RSI power zones. Okay, so that's all we're going to do on this right here. So I am not even doing this with very elaborate preset animations. This is very raw technical analysis. Low, high, higher low, higher high. Looks like we're setting up a higher low. This weekly trend in the big picture is up. Now, you can argue that it's been sideways here. Yes, but it's up on the weekly. We're not using the weekly to make the final stock pick. We're just using this to get an idea of where this market is. Now let's come back. So we did this part. Now let's come down here, evaluate RSI power zones reading. We are lifting up from the bull support power zone. Sure, we're in the bear support power zone right now, or excuse me, bear resistance power zone right now, but in order to trade between the bull resistance and the bull support, you have to trade through the bear resistance, guys. So you will see that happen, but look at the direction of the move. We lifted off from a low in price with a low in the RSI bull support power zone. That is the setup you want to see. Okay, so the final assessment based off the weekly chart is a bullish tilt. Let's look and see if we find long position opportunities on the daily chart. So now we drill down to the daily chart. So now I have them side by side for you. This is the daily chart now with candles. I purposely analyze weekly charts with bars only. It's just the GAN girl in me, okay? Keeps it simple, keeps me focused way more on the bigger picture. But when I come to daily charts, I use candlesticks. Now, let's look at this daily price action. We repeat those steps, remember? So first we're going to figure out what the price trend is, which I think we can all say is up. Higher highs, higher lows. What about the RSI? Is the RSI doing anything that we need to be concerned with? No. When you look at where it's lifting up from, it's coming up from the bull support power zone in this latest low in price. It's all looking good. Identify signals. Do we have anything that's showing up that's warning me that we should not consider along here? Well, one might say, hey, look, we may have a potential bearish divergence, but A, it's not done yet, and B, we're nowhere near showing any sort of weakness yet. So I'm not going to call a divergence until the market shows me there's one. I may have a potential RSI trend line buy. I'm going to draw that in for you here. So you do draw this line exactly on TradeStation, but it came close. It didn't touch exactly RSI trend line buy. Okay. Well, now we have a couple more pieces of the story, and the last thing is to figure out, all right, if I were to make a new position on this stock, and this is a $69, $70 price stock, whether you're going directly off the shares, whether you're doing some sort of option strategy, you still need to figure out pattern-wise where your risk would be. So you locate the logical level for the stop. Well, this is where you kind of end up looking back at the big picture and back at the more recent one. If your trading account can absorb and withstand it, then really you want to be above or below the latest swing high or low, because this is what is defining this uptrend. Unless we fall back below that level, there's room for upside. However, your risk may not allow for that much, so you could come in closer on the more recent chart swings here. So I'm going to highlight those. So higher high, higher low, higher high, higher low. I mean, this is just a visual thing. This is not coming in with additional complex price analysis. So your stop placement here would be very risky. Here would be more sound. But again, that's when it comes back to what kind of trades you're trying to do. So all of this bundled up is what has me put this ticker in the buy now box on the grid. Okay. So I have a couple more. I'm going to move through a little bit more quickly because I think you guys are getting the rhythm of these steps. So if you're still with me, you're getting this flow, can you just type a Q for me? Q for EQR, since it's kind of a random letter, and we'll keep it moving. All right, let's do another one. EXR. This is going to start sounding like a broken record, but review the weekly chart and assess the price trend. Trend is up. Higher highs, higher lows. Evaluate the weekly RSI power zone reading. It's rising, It dipped a little bit below the bull support power zone, but it's on its way up. There's nothing here conflicting with the rising price. Drill down to the daily chart. What's the price here? Well, we're recovering within the context of this move, but on the weekly chart, we already decided that that move was just a corrective move lower. We're in the bigger picture uptrend. Let's look at the RSI in the daily chart. It's lifting up out of the bull support power zone. That's pretty good. Do we have any other signals here? At the moment, I don't have an exact signal because if I do an RSI trendline buy, it's further out. I don't have any bearish, bullish divergences. I don't have anything new, okay? I just have the continued move higher from the bull support power zone. But that doesn't mean you don't need to have a new RSI signal in order to use RSI to determine that a stock is in an actionable place, okay? That just adds further evidence and tilts the evidence scale more in your favor, but it's not required. So where would your logical level for this stop be? Well, when you look on the weekly chart, there's this huge pivot low that's forming or swing low. If you can absorb that, which is approximately the same as this level here, you can go for it, $94 down to $84. But if you want to stay tighter, then this is the latest higher swing low. Okay? If you get much more narrow than that, then you're not allowing this price action to play out. Let's look at the last of the buy now examples, and we'll look at another section of the grid here. LLY, weekly chart. Form new highs, burst higher, pulling back, weekly chart and assess price trend. This is up. What about on the RSI power zones? It went up to the bull resistance power zone and is just working its way off. This is not a sell signal, guys. Those of you who have seen this content before, have my courses, you know that. But anyone seeing this for the first time, just because you get to the bull resistance power zone and back off doesn't mean the uptrend is over. Price defines the uptrend, and right now we're still above the higher lows, and we're well above this old all-time high that was broken above. Drill down to the daily chart. This is what all that business right here looks like now. Assess the price action, assess the RSI. So in here, I see a beautiful rounding action, if you will. See how the lows rounded out? That is super bullish, guys. It's not technically cup and handle. My CMT folks would slap me on the wrist if I said that because the highs and lows are too extreme in it. But overall, this is a very bullish setup, and the breakout above that high would be the actionable point. Okay. Now we are lifting up out of the bull support power zone. So nothing new there. And you find your logical level for stop placement. So I just pointed out that rounding pattern. So it would be below that level, that this is where the platform would be that is defining the latest opportunities to buy this stock. So this is the method that goes into it from my point of view, but there's a lot of stocks to do this on, right? Like 500 in the S&P, 500 plus. So let's go to another section of the grid, just to give you another perspective, because as you all know, we're not just on a buy land right now. There's lots of selling opportunities too. So let's look at the bottom right square, persistent downtrend. That's what I call it, okay? And here's what it means. Persistent downtrend, stocks, tickers that are in that category on my grid, mean the stock is in a downtrend, series of lower highs and lower lows has been established. There's currently no actionable setup for a new short entry or to add to existing short positions. And we want to monitor this stock and watch for it to change position on the stock picks grid to move to a more actionable location. Okay. So these are stocks that if you're short, my analysis is suggesting to stay short. If you're looking to go long, step away from the ticker. And if you're looking to add to your shorts, you probably missed the boat. So in this bottom right, I have a lot of tickers on the latest grid, but I'm only revealing 3 here. Apple, LRCX, MO. Here's what they look like. Same process. So I'm going to go through it a little bit with a little faster clip here. Weekly chart. Review the weekly chart and assess the price trend. This is a very sharp downfall, and we are now weakening after posting a divergence. This divergence was technically in no man's land, but it was a divergence nonetheless that has wiped out what was the uptrend on the RSI. So very weak momentum and weak price. That's the determination off the weekly chart. This is what my dad would have called a falling knife situation. I mean, it's Apple, fundamentally strong company. Do any of us think Apple is, this is it, this is the end of Apple? Probably not. But is it time to come in and stick your hand out and buy more shares? No. The daily chart is where you drill down and you can see even more detail on this. Price trend down, lower highs, lower lows in place, completely established. RSI trending lower. Look at how it had a signal that was actionable here. Higher high in price, lower high in the RSI, and that lower high in the RSI was technically in no man's land, I mean between the RSI power zones, but it was a bearish divergence. It was very close to the bear resistance power zone. So still warned of a turn to the downside. Now we're coming into what? The bear support power zone. Now RSI lives between 0 and 100, guys, so just because you enter a support power zone doesn't mean everything's going to stop and that you're going to start rallying higher. So I just pointed out what's going with the RSI. We had a signal prior. We don't have anything new now. We don't have a bullish divergence. We don't have an RSI trendline sell or any of the others. So where would be your logical levels? Now, persistent downtrend means that, as I said, I'm not advising taking further action in here. But if you are short and you see this on my grid, then you can come in and assess, well, where do I need to lower my stop to? And the general advice is always going to be the latest lower high. So the latest lower swing high is this green bar right here. So that would be the safest trailing stop. Okay, here's another, here's another. But if you want to be out of this position at the safest possible level based on the daily chart, it would be if this price high was taken out, and then you would reassess the trend. So this is a combination of the RSI power zones with a lot of traditional, simple technical analysis approaches. LRCX down, very weak RSI, no new bullish signal at all. So just an ugly picture all around on here. On the daily chart, it's weakening from the bear resistance power zone, which it has done in the last drive down. So what we see here is that this stock, its low was in the bear support power zone, its high was in the bear resistance power zone. Its low was in the bear support power zone, so it's very likely that its high will be in the bear resistance power zone, that it's going to continue this move down. And along those same lines, it would be above these latest highs. Actually, this gap here is capturing all of these latest highs, and that would be the safest place if you're going to go short. Or, sorry, if you're going to move your stop because you're already short. This is not a place to add, in my opinion. Notice how that gap also aligns with this old bottom. Using old bottoms for protective stop placement is a very Gann move, if you will. So we got one more here, MO. Lower highs, lower lows on the weekly chart, respecting the bear resistance power zone on the RSI. So not looking good here. Here's drill down on the weekly, or excuse me, daily chart, completely weakened from the bear resistance power zone. There were many attempts to push above it, and stocks did rally. The stock did rally that whole time, but look how ultimately could not get through the bear resistance power zone. Now it's back at the bear support power zone. 2619 is not the lowest reading. You can get towards zero, remember? So stay away and consider where to protect your position if you're short. So that is the overall overarching method that you can apply systematically to anything you're looking at to use RSI settings to drill down to find those sweet spots. So is this something that you guys can use in your trading? Go ahead and type a Y for me, yes. If that this approach and using this indicator is something that's helping you narrow down to the more actionable setups. All right, cool. And especially those of you who have my other educational courses and content, this is just kind of adding another layer on. So we wrap up with a sweet deal. Ha, 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 my little Thanksgiving pie here. Okay, I'm going to have time, just a little bit, but I'm going to have time to take your live ticker requests. Start thinking about those, okay? First, I want to show you what I'm opening up now. So I said to you guys that I had gone into the lab. I made this grid. I tested it out in April. got feedback, came back, worked on it, and it takes a while to kind of develop these things out. And again, with the help of TradeThirsty 2 and Jeanette's insight, I've now made this as easy as possible for you to access. And if you go to the himareddy.com members portal off my main website, you'll see there's now available for login the stock picks grid. Now, this is a subscription product, meaning it has a period of time allotted to it, and you can renew as long as it's helping you make money and you're happy with it. Okay. So here's what the grid looks like again. Again, I covered it up because I want to keep your focus on the actionable tickers for today's examples. But when you log into the Stock Picks Grid product, if you decide to take up this offer, you will see the entire grid, everything revealed the moment you log in. And this will be my fresh analysis from just Tuesday. Okay. So here's what the whole subscription product entails. First, you get my weekly stock picks. This is off of S&P 500 stocks to start with. And we're going to set this up in a done-for-you way. You're going to just see the tickers in the boxes, okay? Again, using my 16 years plus experience. There's secure product portal access that I just showed you. And I'm going to update the grids once a week. You'll see the details in the sign-up letter, but it's going to say that the grids are updated by Wednesday, 8 p.m. Eastern. That's just to give me some leeway in case I'm traveling or anything like that, but most likely I'm going to do them Tuesday after the close. And you will get an email notifying you when the grid is updated. You don't have to keep sitting there and logging in or waiting to watch it refresh, okay? You will get an email saying, hey, grid has been updated, and it'll give you a reminder of your login info, and you just go take a look. It's all in there for you. Now, with this new product, I need to teach you how to best use it, okay? So we're going to have a 100-day training camp. Yes, this football terminology has seeped into my soul, but the 100-day comes from, you know, like the president's first 100 days in office, right? So the 100 days covers a couple different things. The first that's instant is a grid guide. Now, this is just a PDF cheat sheet that defines the grid structure. So I showed you the buy now. I showed you the persistent downtrend. It walks through the whole rest of the grid structure and the approach to it, okay? This is going to be a handy tool for your offline trading analysis because you can print out the PDF, keep it on the side. And as I make updates to the grid, as I build it out, you're going to get the lifetime updates included. They will all be just updated to that portal. Okay, so that's the first thing you can use right away to better understand what's going on in the grid that's already live in your portal. Next piece of the 100-day trading camp is grid tips. Now these are analysis education pieces direct from me, right? And I'm going to send them to you. They're short and easy to digest. You're going to get one tip every 10 days. Okay, so we're taking our 100 days, dividing up in 10 blocks. So every 10 days starting today, because this is the official launch of this product, within every 10 days you get one tip from me. And it's going to be an educational piece that you can use that's outside of what's currently in your portal. And again, you'll be notified via email. Okay. The last bit of the 100-day training camp are OTAs. Yes, I had to do it, guys. So OTAs in football mean organized team activity, but for us, it means an online trader assembly. So we will get together once a month, just like this in a GoToWebinar in my own room. In fact, the next call is already scheduled. It's already sitting out at my events page, and it's for Friday, December 7th at noon. This is only for Stock Picks Grids subscribers, but the date and time of the event is public information, so people can plan their lives if they want. Now, these sessions will be recorded and archived, and it's for you and us to get together and review, okay? So I see a couple questions here. You do not need a specific trading platform, Bree. I'm giving you the tickers, and then you go and take that and apply it to whatever platform you use and go look at your charts and look at what your scans are telling you, okay? And this is it's not a program. It is a stock picking from me, from my 16 years, which anybody who's been following my weekly videos for any amount of time, you can use that to judge for yourself how accurate I am. And how I always give you the alternate scenario in those videos. You will learn during a 100-day training camp how to always be ready for that alternate side, okay? Now, here's a sweet deal for everyone. I'll make sure I get out to you, and then we'll start taking your tickers. Weekly stock picks. If I take me sitting at my desk, running my scans, doing the stock picks for you, and going into depth and doing this over a course of 90 days, it's quarterly product, that's $5,997 in value, okay? That would be like what you would need to invest for me to just sit there and do this with you in your own trading desk. 100-day training camp, all those pieces, the grid guide, the grid tips, the monthly OTAs, all of that together over a course of 90 days. Again, with the next OTA being Friday, December 7th, $2,997 in value. Okay, I'm talking that like if you were sitting with me solo. But because this is a product I'm opening up, this 8,000 some odd value is not something you have to worry about. This is the launch day, guys. Okay, I worked really hard with Jeanette and the team to get this all scraped together for you for today for TradeGiving. So it is a quarterly subscription of $297. You will be grandfathered in that investment, meaning every quarter you will have the option to renew for only $297, whether the price goes up or not. And you can sign up at himaready.com/grid, as in stock picks grid. It's already there for you. This is the product launch special again, and this is a subscription. So you come in at $297, you get instant access, you get to use everything, beat it all up, go through it. You get every 10 days a weekly tip from me, or a grid tip from me. And these are hardy little educational pieces, guys, not just like a 2-liner email. You get the monthly sessions, so you'll have 3 of those at the minimum in your 100-day training camp. And you get, of course, the weekly stock picks updated Tuesday/Wednesday each week. So this renews at $297 every 90 days. This is only the launch price. This is not going to stay this way for long because, as you can imagine, this is you getting kind of like the best of my brain when it comes to stock picks. So I will come back to the slide, but first I'm going to answer your question, which is probably on your mind. Why do I need this product? Why can't I just take that method you just taught me and go do it on my own? You could, but then you won't be getting my professional analysis based on it. And you won't have all the foundation laid. You're going to have to go reinvent the wheel. And ultimately, you can save yourself a lot of time and money by giving this a try. Okay. So after you sign up, here are the emails you get. I just point this out because I guess I used to be in your seat, remember? I told you how I learned about the market. So just 2 emails you'll get, you'll know you're hooked in once you sign up. One has your login information, and you can log in right away and see all the picks for this week on all the different categories. And then the other is your receipt from Seller Wealth. Okay, that's my company name. So here is the summary of this. So I'm going to leave this on for 1 minute while I look at your questions here, your tickers and your questions about the products. Okay. Bill, I am not having Black Friday sales on my other courses. This is it. I want your attention to come in here. I will say, though, that once you sign up for this course, you will see, and you can just kind of move through at your own pace, there's a couple discounted offers for other products in the lineup. That's all I'll say. Okay. So you can just add them to your cart with 1 click, or you can say, no, I'm good, and move on. There's no forced entry here, but you'll see those after you sign up. Okay. Is this good for longer term investments? Absolutely. This is a swing trading approach. That's why I'm coming in once a week and updating them, but I'm teaching you over 100 days, okay, how to best utilize all this information. And all right, I'm going to start taking some of your ticker requests. So I'm going to keep this information here. Oh, I forgot to mention a key point, guys. Black Friday comes and goes. So this offer is available until 10 p.m. Eastern tonight. Okay. My approach is almost purely technical, yes. And I'm going to come back in and take some of your ticker requests now before I got to let my friend Andrew onto the floor here. So I see a couple of the kind of bigger names here. So here I've got my Pigs Grid ready. So I'm just going to put in Amazon. Oh, these should be hooked up. Let's hook up these charts real quick. AMZN. Okay, so this 50%, this projection was a calculation I was doing that is now no longer applicable. So, gosh. So my off-the-cuff, very quick analysis for you on this is Amazon is looking a lot like Apple in that it's got this straight down look on the weekly. Now it's near the bull sport power zone, but it's been coming down strong. So in this immediate, I would not be advising buying it. It would be more of a sell square, one of the red ones. Which one? Got to determine that. Let's come over to the daily chart, take a look, drill down. We have big swings to the downside. I called this low on October 30th using my timing methods, which I think was very helpful to a lot of my traders. Then there was a rally, and now we push lower. While there's bullish divergence going on here, I don't necessarily see that we're going to run up higher. So I think there's still more room to the downside on Amazon, and the key low to watch is this 1353 area. Okay. So let's go to another, we got 1256. There's a question, are you using some other black box method to come up with these picks? No, guys, like I said earlier in the presentation, maybe you missed it, I'm using my 16 plus years technical analysis experience, which includes GAN analysis. I'm using price action patterns, and it's the RSI power zones that really add that extra oomph for me, okay? If I was using RSI in the standard way, I don't think I'd be seeing these setups. So it's not black box. There's not like some bot I have running in the background that's spewing these out for me. I am doing them with my own eyeballs, my soul, everything, right? But I have my own programmed internal scans that I'm testing out and working on internally that someday could be available so that you could put this analysis on any market. But I got to start somewhere, and so I'm starting based on what the people have been asking for, which is S&P 500 stocks and my picks. Okay. Are the tips on the same days as the grid updates? You know, they may end up being, but they're not necessarily. The tips I've lined up to be every 10 days. This is a new course, so I've got the game plan of what I'm going to be presenting to you, but you're going to see it come out. And in the future, anybody who signs on, they're going to get, you know, of more of a recorded or, you know, older version, but it's still going to be relevant. You're just getting it when it's fresh off the press. Okay. And let's go from there and look at a couple more tickers. I have 2 minutes, so I'm going to do 2 tickers really quick. J&J. J&J, we've got uptrend on the weekly. We've got improving RSI. However, now we're coming into a potential where we're in the bear resistance power zone, then we had a higher high in price. So a little bit more alarming. When we look down and drill on the daily, it's still in a swing mode higher. So this would be one that will probably fall in one of my other categories of bullish, but you got to wait, okay? Because this is just 1 week's worth of bearish divergence happening right now. That does not a full signal wake. I would need to see confirmation. If J&J is weaker into next week, then that might move its location on the grid. Okay, and I'll do one more, and then I'm going to just bring this back. NVIDIA. Super weak, went through a big trend line that I had that had been wandering for a while. Look at where that weakness came in, guys. I did a panel on October 2nd where they asked me about NVIDIA, and I said, stay away. It's going to turn down, and here's where it fell from. So drilling down, similar picture on the daily. And like I said, here is the full offer details for you. I think Jeanette can put the link for you in the chat box, those of you who are asking. And I got to run here and give the mic over back to the team. So thanks for being here. I look forward to seeing you in the OTAs and on the inside of the Stock Picks Grid.